Let's also welcome on board Nitin Raheja, Executive Director at Julius Baer Wealth Advisors. And Nitin, hi, thanks so much for your time. Let's take that conversation ahead. My colleague Varun was highlighting what the street expectation is with respect to the rate cut that one could anticipate to see in September. Where are you placing your bets when it comes to a rate cut? And what do you have to say on the cascading impact it could have on our financials back home?
I think our global view is that we are expecting the first of the rate cuts to start taking place. However, given the data that seems to be coming out, it's very confusing and heading for mixed signals. But I think whichever way you look at it, the fact of the matter is Mr. Trump is going to outlast Mr. Powell. So we are going to see, if not September, we are going to see rate cut in the next meets. So I think clearly, directionally, we are going to see some of that happening before the end of the year. In which case, I think uh, what we believe is that there is a case for a weaker dollar, which sort of portends well for EMs.
Well, yes, a weaker dollar could be good for the EMs, but Nitin, along with that, also help us understand back home what are your sector likings at this point in time? Because, well, of course, we have discussed much in detail how this GST can give a boost to the economy and the different sectors as well. But along with that, post the earnings as well, we have seen a lot of sector churning that was already at play. What are your
Right.
bets right now?
It's this is actually a very, very difficult phase in the markets because we are seeing a progressive sort of earnings estimates getting downgraded for some time, and simultaneously the markets for the last 1 year have done nothing. So you're also seeing a P multiple derating starting to take place as markets don't go anywhere and earnings at whatever slow pace are yet sort of growing, at 9 or 10% and so on and so forth. Our own view is that I think we believe with all the measures that have gone towards domestic consumption and considering the state of the world that we find ourselves in with the tariffs and so on and so forth, I think very clearly the government realizes that for the economy to remain robust, to sort of counteract the so-called tariff penalties that have been imposed upon us. Consumption, which is almost 60% of our GDP, needs to come back and do very well. And hence, whether it was the tax change that happened in the budget or the measures in terms of more liquidity in the economy, lowering interest rates proactively, and now talking of a GST cut, I think clearly these measures with a lag will probably see a revival of domestic consumption. So we like consumption. We have a large part of our portfolio position for that play in consumption. We are playing it a little cautiously. We have uh, premium consumption or premiumization of consumption as a theme, which is a part of the consumption which is more resilient as a part of our portfolios, as well as now we're looking at the broader consumption theme for the lower K of the consumption that has taken place. So we are seeing that happen. At the same time, we also believe a lot of NBFCs and banks are a proxy play for the revival of consumption. So I think we are using that as the other one. The third theme that we see, which is very, very resilient, is the power transmission capex theme. I think that's the third theme which is showing a great amount of resilience in the form of the kind of spending that is happening and the order books that are happening.
Okay, so those are some of the sectors that you're liking at the moment, Nitin. Let's get in some technical ideas from our experts who have joined us on the show, and time to get some BTST ideas as well, or rather some closing trades too. Akshay, you go first. Where are you placing your bets?
A couple of buying bets on positional front. The first one is in Indian hotels, where recently you have seen a very strong price breakout. And in the last couple of days, we have seen some cool off, which is giving you another opportunity to get back in the stock for possible targets of 851. Maintain a stop loss of 762 on this trade. Second trade is in Phoenix Mills, where a good bottom recovery has been seen in this stock in the last four trading sessions. The momentum is very strong, and possible targets till 1672 seem to be in the making. 1537 will be the stop loss on this trade.
All right, so those are the two buy calls coming in from Akshay. Let's watch out for that. But Gaurav, what about you?
So I have a couple of positional recommendations as well, and it's a blend of retest and breakout both, so as to have a balanced approach. As far as the retest is concerned, the first recommendation would be buy on carry ratings, which we had recommended our clients also at lower levels. It gave a very strong breakout at the levels of 1600, 1650, went higher towards 1850 and above. Has seen good correction in line with how the many of the other stocks have seen correction. It's made a retest and now seeing a pullback. So one can buy for 1750, keeping the stop loss at 1550. Second recommendation will be buy on Unominda, where I am trying to bankroll the momentum that we are seeing on a day when Nifty is down 200 points and there is some amount of spread on the mid caps as well. Unominda is one that has been consistently strong. If you look at the weekly charts, we have seen two strong weekly candles. In all likelihood, we'll have a very strong closing today as well. Volume participation is very strong on both daily as well as the weekly charts, and strong outperformance has been seen as well. A swing high breakout on the cards. One can keep a stop loss of 12.15 and buy Unominda for target price of 13.65.
So those are some of the stocks that are looking good to Gaurav at the moment as well. But a pack of stocks that are doing very well on the back of some order wins right now is the entire railway pack, because we've heard order wins yesterday evening post market, and we've also heard a few order win announcements coming in from some of these marquee railway names during the course of the market today as well. So they seem like they are back on the buzz on the back of certain triggers, and Kanishka is joining us to explain what these triggers could be. Kanishka.
Well, if you want to go home for the festive season, the competition is really getting tough because it's really fastest fingers first when it comes to railways ticket bookings. In fact, the Indian Railways will also run 380 Ganpati special trains, while Mumbai's Western Railway is all set to get the indigenous covered safety system by the year end. That's why this particular sector, that is the railway sector, is in focus recently. Not just that, railway stocks, as I said, are on the fast track, lifted by festive season bookings, as I said, strong order wins, and also project announcements. Let's take a look at some of the key order wins. Now, they look, Ircon International recently got an order worth 510 crore rupees. Texmaco Rail has got an order worth 103 crore rupees for wagons. Apart from that, there's Titagarh Rail, which is also won a 467 crore order. Apart from that, there's Jupiter Wagons, which is also won in letter of intent for Vande Bharat trains worth 215 crore rupees. And then there's Railtail, which is one project orders worth 50 crore rupees from Orissa and Kerala state governments. Now, with these orders, the current order book is looking very healthy. In fact, if we take a look at the railway order book, for just at the end of the Q1, Titagarh was at nearly 26,000 crores, Ircon at 20,973 crores. And that's why the railway sector is seeing strong traction. That's why railway stocks are buzzing in trade today.
All right, thank you so much, Kanishka, for highlighting all those details. But Nitin, the other fact of the matter is that of late, these railway counters are once again showing a bit of a momentum. But after so much of a correction and post-budget announcement, Nitin, since there was no big booster for the railway sectors in terms of the government outlay, all these stocks have corrected quite much. Do you believe they are offering an opportunity to enter any particular stock or segment that you wish to flag off?
We are not great fans of these kind of businesses which are dependent on lumpy government flows to come about, because we've seen that long-term sustainable wealth does not get created when you have one large client and who's you're too much dependent on for orders. So I think you will get clearly the direction is we are going to see more spending by the railways. The real question is that what are the valuations you're ready to pay for these kind of businesses and companies? To us, I think some of these are more, short-term tactical bumps that you get every time you see an announcement of an order. So we are not really, we would rather play it through a diversified engineering company, which also has the railways as one part of the business, rather than some of these names, where, the railway is the primary business and, there's one customer with 80-90% of the order book.
Okay, so that's the take coming in on railways and not looking very attractive to Nitin right now. But on that note, it's time to slip into a very short break. But as we do that, let's leave you with a very exclusive special interaction. The ban on real money online gaming may have an economic impact, but a negligible impact on employment. This is according to Tamil Nadu's IT Minister, Mr. Palanivel Thiagarajan. Speaking exclusively to ET Now, the minister also predicted more tough times for jobs in big IT, but told Jude Sanat, my colleague, that unlike Karnataka, Tamil Nadu wouldn't contest whether IT employee unions were legal or not. As we slip into a very short break, listen in.
I think in the tech industry there are always inflection points, right? There are places when new approaches emerge, new scales emerge, and it changes the industry quite significantly. The kind of AI that we're talking about now, as I have just said upstairs, is in some sense automation of a lot of things that used to be done manually. And most of the innovators will be, by definition, small and medium. Right? Very, very rare that you find huge innovations happening in large organizations. We are all for online gaming. We are only banning real money games. So if it's entertainment, if it's creativity, all these things we are for, and we're supporting them in a big way. We've come up with an incentive policy for them. We're supporting the annual conference. I'm not so sure what the impact is on employment. I think that if you were to have a downturn in the sector, you would have certainly economic consequences. But generally, game development tends to be the lowest kind of manpower, highest productivity, highest creativity industry. We support the game development industry, online gaming, independent of real money.
On just a few minutes left before we shut shop and end this week rather, and Nifty 50 is now down over 200 points right now, while Nifty Bank as well, we have seen that selling getting intensified with over 600 points of cut as we speak. India VIX today is showing a bit of an uptick today. It's almost a 3% jump over there, while the breadth of the market is not looking that great, or rather in favor of all the bulls out there. But Nitin, what's your own sense on the new age tech companies? Because in the sell-off or the volatility of late, we have seen stocks like Zomato, Paytm, they are doing very well and they continue to do well. Even the earnings were supportive. But how do you justify the valuation and the kind of run-up that we have already seen? Do you believe any pocket still offers an opportunity?
I think if you look at some of the new age tech companies, what the market is rewarding them for is the fact that a lot of them have evolved their business model towards a path to profitability. And not only that, but with the existing business segment being where it is, they're now investing in new, using the, they've converted into platform plays. And these platform plays are now leveraging the platform for newer areas. And so they're basically opening up the entire TAM for the business. And in this kind of business segment, ultimately you will see the top two, having a 70-80% market share and the rest struggling to be there. So yes, I do agree that valuations have run up quite a bit and they are not necessarily cheap. But I think the markets are really rewarding the market leader by giving them a premium valuation. I think there are a lot of other areas. I think we will soon see, for example, if there is a move towards monetization of the UPI, you will see some of the payment companies starting to do well in this new tech area. You will see some of the retail-oriented companies starting to do well as we see domestic consumption pick up. So I think we will see pockets of opportunity over the next few years come out there.
Well, indeed, they are getting rewarded. And thanks, Nitin, for explaining the factors behind it. But Nitin, within the auto pack, we have one of those other companies, which is not purely a new age tech, but it's rather an EV company purely. And of late, we have seen that EV fight in terms of the market share, especially in the two-wheeler side, getting intensified. Who, as per you, could be the real winner, or the market is really going to be a little staggered in a way, because the legacy players have now managed to gain some market share, but seems like some of the pure play EV companies are also gearing up to give a tough fight. What's your sense here?
I think if you really look at EVs today, there's a lot of promise that is yet being built into some of the valuations out there. And it's yet open ground in terms of the competitive intensity, and that's only getting increased by the day. I would yet like to bet on some of the legacy players because you have a strong, traditional business, which is the non-EV segment, which is giving cash flows, which is allowing them to invest into the whole EV segment. They have a dealer network at place. They have a brand in place. They have a reputational for reliability being there in place. So I would, yet like to play that through some of the legacy players who have strong cash flows and who have the potential and who are also putting the might behind the EV segment.
All right, so stay with the legacy players versus some of those pure play EV companies. That's a call coming in on the two-wheeler EV space. But Akshay, just a few minutes left, and the markets are definitely having a bit of a pressure from this highest level. We are sub that 25,000 mark. But Monday, we're going to be reacting to the global commentary with respect to the Jackson Hole Symposium. Next week, it's not just the monthly expiry. We also have the 27th August deadline. How do you see the opening on Monday, and what sort of levels that you will be keenly watching out for?
See, as we close today, we are at an important support zone, but looking at the intensity of the fall and 25,000 once again not able to sustain despite the efforts seen in the last couple of days makes me believe that the chart gap which we saw on Monday's opening, there is a good chance that this gap might get filled. So roughly 24,600, 24,650 revisit and fill up of that gap is most probably what is happening, and that should be seen in the expiry week on probably on Monday or Tuesday. That's the price setup saying that possibly 100, 150 points more to go on the downside.
All right, 100 and 150 points more to go on the downside. But what about Bank Nifty, Akshay? How do you see the closing with almost 600 points of cut?
Bank Nifty now would deal with one of the most important support zones of 55,000. This has been more of a litmus test because we did see a kind of a gap up on Monday, but somewhere Bank Nifty has been a laggard in the entire week gone by. And if 55,000 breaks, then it can be some momentum-based selling in Bank Nifty where one should be ready for downside still around 53,800 or possibly around 54,000.
So let's watch out for those levels indeed. But with this, Nitin, Akshay and Gaurav earlier, thank you so much for taking the time out and speaking with us this afternoon. Pleasure talking to you guys.